very high risk in Kurdistan as it's a pretty uncertain fiscal regime. But on the positive side, there's very low-cost oil with minimal geological risk. A couple of companies that are involved in Kurdistan, Western Zagros, which is currently drilling a well with Talisman as a partner. Smaller company that's maybe not as advanced as Vast Exploration. They're scheduled to start drilling in the first quarter of 2010, and they've got a partner called Nico Resources. Enhanced oil recovery. This is a real interesting take on where we're going to find our oil in the future, because on average, about a third of the oil in place that has ever been discovered has been produced. That means two-thirds of the oil that's been discovered is still stuck in the ground. So any increase in the recovery factor can create oil reserves without any additional exploration. It's a kind of a tricky concept. Most people don't realize that, we leave a lot of the oil in the ground. But I'll show a couple of production graphs that give a couple examples of what actually happens. So slide 13, this is a production graph. So on the left axis, it shows the barrels of oil per day, and then time along the y-axis. And it shows that the production from an oil field called Weyburn, which was discovered, I believe, by Shell in 1955 in Saskatchewan. And after discovery, production quickly ramped up as they drilled more wells into the field, but peaked roughly around 1965 and then slowly declined. And then we can see the impact of different technologies on the production profile, which actually started to increase again. And that came through infill vertical wells, then horizontal drilling, and more recently, technology called CO2 flooding or tertiary oil recovery, where they'll inject CO2 into the reservoir, which helps produce a lot more extra oil. And it also has the bonus feature of storing CO2 underground. Now, one point I'd like to make really clear is that in the United States, there are several companies, the Permian Basin and Denbury Resources have done a lot of work injecting CO2 without any government subsidy or any help from any, they just did it because it made money. They didn't even care about storing CO2 because at the time they weren't getting any credit for it. So there's been a big shift in enhanced oil recovery because the economics may be affected by CO2 cap and trade type plans, and anything that can reduce emissions might become more valuable. But on average, most of the time, these projects should be able to be economic without any kind of CO2 related subsidy. If you're interested in the process of tertiary recovery, Denbury Resources has a really good YouTube video, and I've provided a link at the bottom of the slide. This is a quote from Darcy Evans, who's the president of Denbury Resources, and it sort of corresponds with that rough rule of thumb that 15 to 30% of the oil in a reservoir can be extracted just under natural pressure, and then often a field will be moved into a water flood, and that number, in his example, can get up to 40%, and then using enhanced oil recovery with carbon dioxide, we can get another 10 to 20% out of the ground. So ultimately, we're looking at fields having in excess of 60% of the original oil in place produced. And remember, right now, on a global average, we're probably only at about 30-35%. These numbers are all going to be different depending on the field in question. Obviously, the longer they've been in production, the greater the percentage of original oil in place that is produced. But if you're looking for a company that is actively applying CO2 injection, Denbury Resources has done very well, and they started actually by tying up a natural supply of CO2 and getting a monopoly on the CO2 supply in Mississippi, and then they just applied enhanced oil recovery to fields in Mississippi using their CO2 supply. Now they've branched out and are looking at taking man-made sources of CO2 and continuing on with their work. Slide 15 is a graph again of increasing oil recovery, and this time it was through the use of an injection technology called Power Wave. And this example is from Alberta, and it shows oil production on the left-hand side, and it's actually incremental oil production. That's in addition to what would have been produced normally, and it shows that the production increased after this new injection process was used. Now, power wave is pretty interesting in the enhanced oil recovery world because it doesn't really require the injection of a different fluid. A lot of the enhanced oil recovery methods require, you're injecting CO2 or sometimes you're injecting chemicals. But this method actually works in conjunction with whatever fluid is being injected. So in summary, most enhanced oil recovery processes involve injecting a different sort of fluid, whereas power wave is an improvement on the injection process itself. This is a quote from Brett Davidson, where Wavefront maintains that power wave can increase reservoir recovery factor by 25 to 50%. And they've just put out a press release today where they documented and they basically doubled the amount of CO2 they were injecting into a project in Michigan, and they were doing that at a lower pressure. So it's a pretty interesting technology. They're able to typically inject 3 to 5 times more fluid into the ground, and the process works a lot better with liquids than it does with a gas like CO2. And the end result is they get a lot more oil coming out on the other end. And there's a hyperlink there if you want to check out their website. It's a company that I do own shares in, and I've been following for a very long time. Here are a couple articles that I encourage people to read just to get their head around the concept. These articles are routinely attacked by peak oil adherents, but I would put it to you that these articles were both written by high-level management at major oil companies, and they do have a pretty good understanding of where the business is going. So in conclusion here, I'd just like to say that, yes, we will eventually run out of oil, but do not underestimate the power of human ingenuity on the world's oil supply. We're really doing a big disservice to ourselves by thinking that we're going to run out of oil immediately. Obviously, there are threats to oil supply. There's resource nationalism, geopolitics. Global warming and climate change initiatives may make it cost prohibitive to use petroleum products. We run into manpower shortages when prices are high. Material costs can get too high. But in terms of the long-term oil supply, it would be a bit unreasonable to expend the capital required to guarantee a 50-year oil supply today. Ultimately, we kind of go, most planning horizons aren't that long. I don't think we're going to run out of oil anytime soon, and I think it's going to be there when we need it, and it'll give us ample time to find alternatives. And my favorite quote is, the Stone Age didn't end because we ran out of stones. I think we'll replace oil with something better over the next 25 to 50 years, and in the meantime, we'll be using hydrocarbons. I write a newsletter called The Big Picture Speculator. It's been around for 5 years. I speak at conferences all over Canada and the U.S., so you can click on the link for subscription options. And with that, I'd like to thank everyone for listening to my presentation today. This is the small cap stock warning, meaning that some of these companies are not liquid and they don't trade large volumes. As always, you're responsible for your own investment decisions, and I'll reiterate that I am a shareholder of Wavefront Technology Solutions, symbol WEE.V. Thanks again for listening.